And to discuss more on this topic, we are now being joined from Riyadh, Professor Suyash Bhatt, Director Academy for Finance, Technology and Innovation. Welcome to the broadcast, Mr. Bhatt.
Morning. Good morning.
Good morning. So my first question to you is, what do you think is going to be the impact? It's pretty obvious, the impact of the ongoing Israel-Hamas war on the oil market.
You very beautifully captured the entire, history actually, and in terms of what had happened. And in 1973, one of the reason why crude oil prices rise from almost by 70%, and then in next 6 months it went from $3 to all the way up to $12, was the supply was curtailed. And the situation now is very different from what it was maybe 50 years back. The world has changed, the geopolitics have changed, economics has taken precedence over this, and moreover, COVID has really impacted most of the economies across the world, so including the suppliers. So this we may not see a kind of a replication of what we saw at that time in terms of directly, supply being choked and prices going up. And let's see from an economic perspective. So I mean, the one of the reason why oil was rising till Q3, I mean, it went up all the way up to $96. Almost 28% up this year. And one of the reason why it was going up was there was an optimism that these economies in Europe and US and China are coming out of the slowdown, and the economic activity as it picks up, it should boost the demand and the prices should go up. But even before yesterday, I mean, I would say last Friday itself, there was a $10 drop in crude oil prices. And one of the reason being the Fed's moved, of increasing interest rate by 25 basis point. And this is not something usual. So in the world of in finance, if you see, the last time the 30-year bond yield went up to 5% was around 2007. And we know what happened after that, the subprime crisis and the financial crisis. So US dollar index, that's the second indicator. So US dollar index is always inversely proportional to the crude oil prices. That reached around 108. And if it touches 110, then probably you would see further fall in prices in crude oil. At the same time, you would see the oil suppliers have on 4th October, when an OPEC meet happened, there was no action actually which happened. And the major suppliers, that is Saudi Arabia, has decided to maintain that 1 million barrel cut till the year end, and Russia having kept the supply cut off at around $300,000 barrels per day. So this scenario, as of now, there's a status quo. But I mean, things are very different than what we saw 50 years back.
So, Mr. Bhatt,
there may not be any need.
Are you indicating that there could be a change in this strategy? Because the OPEC Plus meeting that happened on 4th of October, of course, we did not know the conflict that was going to ensue. And now that there is one, do you think that for the biggest oil suppliers, Russia and Saudi Arabia, there's going to be a change in strategy now?
So, I mean, in terms of response to this event, I mean, it's anybody's guess. I mean, very difficult to say what would be the response from the suppliers. But if you see purely from a business perspective, this doesn't make sense. The reason being, I mean, if you increase the price beyond a point, there's not much economic activity to support it. And there's already a fear of, global economic breakdown about to happen, where you're seeing almost, I mean, in 1973, if you go and check how many people went to IMF and borrowed money, the number of countries were less and the amount was as well less. And that has gone up in last 3 years, significantly up. And one of the reasons being the slowdown that happened due to COVID. So from a price elasticity perspective, if you see, there's no it's beyond the market's capacity to pay for higher crude oil prices. So the suppliers would have to also keep this in mind. So economics may precede maybe decision making or in geopolitics as of now, and that's what it seems. But I mean, would there be a strong reaction? There may not be, because even if you see today, the crude oil prices have gone down to almost $84. Brent crude is trading at $84. So there is no knee-jerk reaction that you may see immediately, unless something, out of the blue. I mean, that's again anyone's prediction. What would someone do? But from a pure business perspective, it doesn't make sense that you may not see any sudden move. And also, if you see from a Russia perspective, they just recently, yesterday, they
Okay,
allowed
Mr.
this.
Bhatt, I will have to interject. We are running out of time there, but thank you
Sure.
for giving us that detailed insight into how the economy is going to get affected in the face of Israel and Palestinian conflict.